Time for hot picks. We're going to focus on U.S. mid-caps. Our guest says his first idea, e.l.f. Beauty, has been beaten down by tariff concerns, and this is a buying opportunity. We're joined by Ryan Modesto, CEO and Portfolio Manager at i2i Capital Management. Ryan, great to see you. Start off with e.l.f., if you would.
Yeah, so e.l.f. is a beauty cosmetics retailer. They do skincare, lip balms, face makeup, things like that. And they actually just did a pretty big acquisition of a company called Rhode, which you've probably reported on a little bit here. They're the company that's owned by Hailey Bieber. Mm-hmm. So it's a bit of a Canadian connection once removed there, I guess. So they purchased this company for about $1 billion, and they're doing about 250-ish million in revenues. Are growing really fast. So e.l.f. thinks they can kind of integrate this company, improve their distribution, their production capabilities, and all of that kind of thing over time. What e.l.f. has done well over the years is going after premium and prestige beauty brands and then replicating them in a deep value manner and offering them to their customers at kind of a low price versus those prestige type prices that you typically see. And so how do they do that? They do that with Chinese manufacturing, right? So it's lower cost, obviously, and then now with all this tariff drama that's been happening, the shares of e.l.f. have gotten beaten down over the last month or two over tariff concerns. But we think markets have had a lot of time now to digest what this impact's going to be. The companies had time to digest the impacts and make adjustments. About 75% of their manufacturing comes out of China. But what they can do is they can increase prices over time to offset some of these tariff impacts. And since they're a low price offering, say if you're $10, you increase your product price by just $1. That's a 10% net benefit to the company, right? Whereas maybe the more prestige type of brands that are higher priced, it's going to be harder for them to increase their prices materially. So we think they have some potential to offset some of that impact coming from tariffs. But there will be volatility. It seems day to day at this point around tariff headlines and stuff. But we think kind of a lot of that bad, nasty tariff news is priced in with e.l.f.
We're a bit tight for time. I'm sorry about that. Freshworks, they offer customer service software. What attracts you about this name?
Yeah, software name doing customer experience, employee experience. The employee experience business is growing at a fast rate, but since the customer experience business is so much larger, we think it's not going appreciated. So their total top line growth around the 15% range, and they're also buying back shares right now. Also, they have 22% of their market cap in cash, repurchasing shares in X cash. They're trading about 19 times forward earnings.
And then your final name had been around for a long time, GoDaddy. We think of them as mainly helping people put up websites, hosting websites.
Yeah, so domain registration business, they have about 22% of the worldwide domain registration market. So nice market share. And it's a nice, sticky, high cash flow type of business. But they also have a website building business. Well, they've had it for a while, but they're really starting to lean into it. And they're leaning into it with these AI tools called GoDaddy Arrow, which helps you, create logos through AI, helps you register your business, answer social media queries, things like that. And they're going to start converting a lot of their captured domain customers and convert them over to their higher margin, higher growth website building and services type of business. Really good capital allocator here also, and consistently buying back shares as well. So they've had a bit of a dip more recently. We think it's a pretty interesting opportunity here for kind of that long-term compounder type of name.
Interesting. I mean, if you've signed up with them, you got your website running, it's sticky. You're going to be reluctant, I guess, to go to another provider and encounter all the hassles.
Yeah, and it's a captive audience. They can continually just go after that group of domains they have, those domain customers, and slowly but surely convert them over. It's cheaper than having to go inorganically, go through advertising, try to acquire net new customers. So we think there's a really long-term growth runway through that.
And fascinating. And they're going to be using AI to help people build websites. Ryan, we better jump. Thank you very much indeed.
Thank you.
Ryan Modesto, CEO and Portfolio Manager at i2i Capital Management.